Hello, welcome you all for the third class of 10th week, which focuses mainly on illustrations in relation to input tax credit. Let's begin. Illustrations on input tax credit mechanism. Illustration number 1. Following are the information provided by Mr. Y in relation to the supplies made by him. Number 1. Value of outward supply of goods rupees 26,500. The rate of GST is 10%, that included both CGST plus SGST. Number 2. Value of inward supply of goods rupees 12,800. The rate of GST is 12%, including CGST plus SGST. Number 3. The supplies are intrastate. You are required to show the working mechanism of input tax credit for the above case. Solution to the case number 1. Determination of net output tax liability of Mr. Y. Let us determine the net output tax liability. Output tax liability of Mr. Y. Particulars amount rupees. GST on outward supply at 12% on rupees 26,000, that is determination of net output tax liability of Mr. Y. Determination of net output tax liability of Mr. Y. Here output tax liability is both CGST and SGST. Let us determine SGST, CGST. First consider GST payable on outward supply. Outward supply at 12% on rupees 26,500, that is 1,590 each. 590 each. From this outward supply, we have to deduct tax paid on. From this GST liability on outward supply, we have to deduct the GST liability on inward supply less GST liability on inward supply at the rate of 12% on rupees 12,800, that is rupees 768 each. After deduction of GST paid on inward supply from outward supply of goods, the net output tax liability of Mr. Y is 822 rupees SGST and 820 rupees of CGST. So this is what net output tax liability of Mr. Y under GST. Notes to the illustration number 1. Rate of SGST and CGST are 6% each. Input tax credit balance, that is rupees 768, each is utilized for paying output tax from electronic credit ledger. Illustration number 2. Following are the information pertaining to MNO incorporation. Number 1. The outward supply of goods rupees 35,800. Number 2. The inward supply of goods rupees 33,000. Number 3. The rate of GST on outward supply is at 10%. Number 4. The rate of GST on inward supply is at 12%. Number 5. GST includes both CGST and SGST. Determination of output tax liability of MNO incorporation under GST. Let us determine output tax liability of MNO. Particulars. SGST, CGST. Let us consider tax on outward supplies. Tax on outward supplies at the rate of 10% on rupees 35,800. That is 3,580 will be the outward tax paid on outward supply. So for SGST it will comes rupees 1,790. For CGST also it will come rupees 1,790. From this outward supply tax we have to deduct tax paid on inward supply less tax on inward supply, tax paid on inward supply at the rate of 12% on rupees 33,000, that is rupees 3,960. For SGST it will comes rupees 1,980, and for CGST also it will comes rupees 1,980. This is to be put in bracket because it is the negative value. It has to be deducted from the tax on outward supply. After deducting input tax from output tax, we will have rupees output tax liability is nil. Why here output tax liability is nil? Because here input tax liability is more than the output tax. So output tax liability will be nil. You are required to show the working mechanism of input tax credit for the above case and give notes wherever necessary. Solution: determination of output tax liability of MNO incorporation under GST. Notes to the solution number 2. Note 1. In the above case, we can observe output tax rate is less than input tax rate. Such tax structure is known as inverted tax structure. Note number 2. The MNO incorporation can claim the refund of excess duty and can carry forward the same for the next period. Illustration number 3. Giant Limited is the manufacturer and seller of taxable commodities under GST and provides the following details on the supply made by them. Number 1, machinery purchased for manufacturing of finished goods rupees 10 lakh and GST paid at 20%. Number 2, inward supply of capital goods for rupees 30 lakh and GST paid at the rate of 10%. Number 3, inward supply of services for rupees 10 lakh and GST paid at the rate of 10%. Number 4, outward supply of rupees 65 lakh with the GST rate of 10%. Determination the net GST liability of Giant Limited. Solution: determination of net GST liability of Giant Limited. Let us determine the net GST liability of Giant. Determination of net GST liability of Giant Limited. CGST, SGST particulars. Let us consider GST on outward supply. Outward supply at the rate of 10% on rupees 65 lakh, that is rupees 6,50,000. For CGST it will comes 3,25,000. For SGST also it will come rupees 3,25,000. From this outward tax we have to deduct GST paid on inward supplies less GST on inward supplies. There are three inward supplies. Number 1, on machinery at 20% on rupees 2 lakh, that is rupees 40,000. On machinery at the rate of 10% on rupees 10 lakh, that is rupees 2 lakh. For CGST it will comes rupees 1 lakh. For SGST it will comes rupees 1 lakh. The second inward supply is capital goods. On this GST at the rate of 10% on rupees 3 lakh is on rupees 30 lakh is rupees 3 lakh. For CGST it will come rupees 1 lakh 50. For SGST also it will comes rupees 1 lakh 50. On input service, let us consider on input service at the rate of 10% on rupees 10 lakh, that will comes rupees 1 lakh. For CGST it will come rupees 50,000. For SGST also it will come rupees 50,000. So after deduction of GST on inward supplies, the net output tax liability is rupees 25,000 under CGST, 25,000 under SGST. Net GST liability. Notes to the solution. In the above case, we can observe that there are both input of goods and services and on which the input tax credit is claimed in one go. It means For input tax credit purpose, there is no differences between goods and services. Illustration number 4. Sukesh Incorporation, being a manufacturer of taxable goods under GST, and supplied the same in the month of October 2018 for sale to a distributor for rupees 12,28,500. However, the Sukesh Incorporation deposited the GST at the rate of 14% on such goods on 15th January 2019 against the notice issued by the GST authority by observing the fraud, and passed an order as per GST rules. During the month of November, the company has taken inward supply of rupees 6,22,000 with the GST at the rate of 12%. You are required to find the net GST deposited by the company in response to notice. Number 2. Determine the net GST liability by assuming there is no notice issued by the GST authority. Solution: net GST deposited. CGST, SGST. Particulars. As usual, first consider tax paid on outward supply. Outward supply on rupees 12,28,500 at the rate of 14%, that is rupees 1,71,990. For CGST, it will comes around rupees 85,995. For SGST also it will comes rupees 85,995. From the output tax, deduct tax on inward supply, for this case tax paid on inward supply is not allowable, because we are determining net output tax liability on the occasion of notice issued by the GST authority. So net output tax liability under both the circumstances, that is CGST and SGST, is rupees 85,995 rupees. Case 1. Net GST liability when there is a notice. Determination of net GST deposited by the company on 15th January 2019. Note: it is noted that the GST authority issued notice by observing the fraud. If fraud is occurred, in such a case, the dealer is not eligible for claiming input tax credit. Case 2. Net GST liability when there is no notice. Determination of net GST liability of Sukesh Incorporation. Particulars, CGST, SGST. Again consider tax paid on outward supply, tax on outward supply, that is rupees 85,995, 85,995 in case of SGST. From outward tax deduct inward from outward tax deduct tax on inward supply. Inward supply is rupees 6,22,000. at the rate of 12%, that is rupees 74,640. For CGST it will comes around 37,320. For SGST also it will comes around 37,320. After deducting inward tax on outward tax, the net output tax is 48,675 for CGST, and for SGST also it will comes the same amount, that is 48,675 rupees. This is what net GST payable when there is no notice. Illustration number 5. JK Limited acquired the machinery for rupees 20 lakh for the purpose of manufacturing of taxable goods under GST, and the company paid GST at the rate of 12% on the cost. As a GST consultant, advise the options available for the company to claim input tax credit on the purchase of the machinery. Solution: in the present case, the company is having two options for claiming input tax credit, or option number 1, the company can claim depreciation on cost of the asset, that is rupees 20 lakh, and the input tax credit on GST portion of the machinery, that is 2,40,000, which is the 12% of the cost of asset, that is 20 lakh. Option number 2, the company can forgo the input tax credit by claiming depreciation on the entire value of machinery inclusive of GST, that is rupees 22,40,000. This ends the discussions of third class of 10th week. In the next class, we are going to solve some other illustrations and also discuss an input service distributor under GST. Thank you.